Give me a quick update. What spot are you in line for the Robinhood cash management feature? And then how has your portfolio been performing lately? If you guys are new here to the channel, don't really know what it's about, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you, then make sure you subscribe to the channel and turn on that bell notification to be alerted when new videos come out. Okay, so what I'm going to do for you guys here is actually pop right into the Robinhood app to start covering some of the things that I want to go over this week. Now, you can see the past day, I was able to make a over $20 gain on the market for a 1.1% return. The past week, we're up $37.65 with 1.94%. The past month, we're up even further, 2.5% or a $48 gain. And then 3 months, we're up 3.62%. Now, we haven't even been doing this challenge for 3 months, so this is really solid returns for the short term. And then also past year, we're up 101.89% or close to $1,000. So really great things here from these numbers. I wanted to cover some of my stock picks and what I did this past week actually, but before I did that, like I had asked at the beginning of the video, I'm wondering what spot in line are you guys for the cash management account. So if you didn't already know, you can actually tap the screen and start going up spaces with what spot you are in line. So I'm just going to finish up my taps for the day, and while I'm tapping on this, I'm just going to ask you guys to tap that like button, because any of the likes or comments that you are posting just really help with that YouTube algorithm. So thank you in advance for that, and let me know what you guys are at. So I just currently reached my tap limit for the day. I saved a couple more for this video just so I could show you guys that feature, and I jumped up 807 spots in line today. So if I do this for, I don't know, 15 more days, probably I will be first in line. So really great things out of this, and I'm expecting to get this card relatively soon. I'm not even sure if they've started shipping them out yet, so if any of you know that, please comment down below. But just going back and covering what's been going on this past week, actually, I'm going to give you a breakdown of the entire stock portfolio right now. So the top three here you can see are going to be the dividend monthly companies that are paying me. So every single month, I'm going to be getting a dividend from these companies. That is Realty Income, LTC Properties, and PSEC. So I'm going to break it down, and actually, I'll show you my total return on these. So you can see Realty Income is just a killer for this stock portfolio, up almost $35, which is just a very solid return. If I click into it here, you can see what's been going on. So my average cost to buy in was $72.36. It now costs $78. I own 6 shares of this, and I'm up $34, close to 8% right there. So really solid returns from this. This is one of my favorite companies. They are a dividend aristocrat, and I'm going to be posting some of the stats on the screen here about what they've been doing for their returns and their dividends over the past, I think it was 80 consecutive quarters or somewhere around there, but they've just been increasing, which has been really solid, and you know you're going to be paid from them monthly. Then hopping into LTC, this is another REIT, so real estate investment trust, and it's what I like to think of as a more affordable kind of realty income if you wanted to get that into your portfolio. I currently own 2 shares at an average cost of $50.30, and then the total return on that is $1.73. So, you know, not too much, but close to 2% is still pretty solid. I'll take that return any day. Dividend yield for this is 5.47%, so I think that's relatively common for the stocks that I'm investing in here. Now, let's jump right into PSEC. If you've been following along with this challenge, you know PSEC is a monthly dividend company that I actually just kind of take the excess money I have each week and throw it into here if I don't have enough accumulated to go into a higher price stock. So this is one that you'll see throughout my portfolio, kind of just adding over time, and you know, over the past 5 years they haven't been doing great, but what you'll see is basically the returns on the dividends will start to mitigate some of those losses that people see from a stock like this, and moving forward you can expect to see those returns starting to increase, and hopefully as the stock bounces back, then you'll be able to get some returns on top of your investment. So those are my 3 monthly dividend companies. I love monthly dividend companies. Let me know what you're invested in for your monthly dividend companies, just so I can broaden my reach and just know more about what's out there. So I want to talk a little bit about one of my favorite stocks here, which is CocaCola. Now you'll see that I'm currently down on CocaCola, but does that mean anything for the short term? No. CocaCola is a very solid company. I actually have a bottle right here. I don't usually drink Coca-Cola, but I just happened to get one this weekend. Went a little crazy, so that was pretty interesting right there. So total return down nearly $1.30. I've been holding them for a while. Average cost at $53.84 with the cost right now at $53.51. Still a great price to get in. Coca-Cola is going nowhere. I mean, they own so many different things. They're not going to go anywhere anytime soon. Dividend yield of 3.29%. Moving on from Coca-Cola, AT&T. This is a killer for my portfolio. Not only has it been getting me a 9% return, close to $15, but also it has a 7.04% for dividend yield, which is just really high. I think it actually is the highest in my portfolio. And you see this phone right here? This phone is actually not on AT&T, it's Verizon, but as soon as I get kicked off this plan, I think I'm headed right over to AT&T. Just a little bit more revenue for them from me. Kind of interesting to buy the products that you're actually invested in. Definitely makes the purchasing decisions a lot simpler when you are an investor in these companies too. Now, Johnson & Johnson is one that I follow closely because they are ridiculed and burdened with a ton of different lawsuits and different actions going on, and they have risen to the occasion. Today, they actually announced that they beat earnings, so it was really good sign for investors, and moving forward I think this is showing to be a more hopeful stock. So they gained over 1% today, and they're still going up after hours, so we'll see where this heads and where it opens tomorrow. Really interested to see that. Johnson & Johnson not going anywhere anytime soon. Huge healthcare stock. They have a lot of different consumer products. I believe Aveeno is owned by them, and then they have Johnson's, like that baby soap that basically doesn't burn your eyes. I don't even know how they do that. That's pretty magical in my opinion. I've no idea, but super cool stuff for them. Then jumping into Citigroup, another one that has been killer for this portfolio, up nearly 14% or $17 total off of only 2 shares. So imagine if I just had bought more when I bought into this, I'd be sitting really pretty right now. Wish I had more money to invest back then when I did. I believe they also announced their earnings today, and that's why they had another 1.5% jump. They beat their earnings. Let me scroll down here. Yep, they beat their earnings. There you go. So that was awesome news today. A lot of companies reported earnings from my portfolio today, and every single one beat or hit the expectations. So that's really great when you're an investor getting that information. Next, I'm going to jump into Microsoft. And Microsoft is a huge player for anybody interested in investing in the technology realm. I mean, let's take a look right here. I have my Xbox One. This is the day one edition, so pretty cool. I always have used Microsoft products in work. That's all we do. Office 365. They have experimented with the cloud. They have so many different offerings, PowerPoint, Word, different software. Microsoft, very solid company. My returns on them, $5.91. And that is nearly 5%. You can see after hours they took a huge dip today, so I expect them to open much higher tomorrow. I don't know what that was all about today. Jumping into AOS, now this is A.O. Smith, and they are a very solid pick as well. I believe they're still undervalued, and in this portfolio they've actually given me a return of $5.88 or 3.13%. Something really cool is most of these stocks have actually given me money. Almost all of them are positive right now, which is a great sign, and a great sign of the economy in general, because a lot of these might be tracking the S&P 500, which is good and bad in the sense that the S&P 500 usually, I think over a 25-year span, has always consistently been able to return decent profits. So that's somewhat of an emphasis of this portfolio, is just getting that return on your investment. Now, this is one of the few financial companies that I'm invested in, and they are a very solid pick. Another really interesting pick is actually HPQ. Now, I invested in them, and then they have just lost a ton of value because they are going through financing issues and they're restructuring their entire layout of the company. So there's a lot to be said about HP for the future. They basically need to turn around what's been going on now. And I actually ended up picking up, I believe, 2 shares today because I just want to get that average down. I want to dollar cost average my way into this company. So I was actually able to return $1.41 today. You can see my average cost is $17.71, and I'm not sweating at all. I still believe in HP over the long run. I use a bunch of HP products, whether it's my work laptop. I also have a couple different products inside my laptop, and then they also do a bunch of different technology items. So it's pretty interesting there. HP is definitely a riskier one in my portfolio. Now, Pfizer is at a really good buying point in my opinion, because they have this dip right here. Over the past 5 years, they have gone down, and you can see it was hovering right around $40 and above. So I think we could get back to that price point. Pfizer is an awesome pharmaceutical company if you're interested in the pharmaceutical industry. Usually I don't do so well in the pharmaceutical industry, but I really wanted to get in on Pfizer because I just noticed that I thought it was a pretty good buy-in price. So my average cost is $36.10. I have 2 shares. Expect to see more of this being purchased in the future. Dropping down into Schwab. Now, it was funny because I said I would not be investing in companies like this because of all the competition that was coming out with Robinhood offering free trade, Schwab then offering free trade, TD Ameritrade with free trade. All of this big free trade war that I previously talked about is just a reason to kind of stay away from this investment. But I didn't realize how soon Schwab would be reporting earnings, and I know in the short term that Schwab wouldn't be really affected by offering free trades because they already capitalized on the revenue that they gained previously using the trading features on their accounts. So I knew that their earnings would be pretty good. So today they actually beat their earnings, and because the price of the stock had been digressing and people were, selling off, basically I saw a great buy-in opportunity right before earnings and was able to make a quick profit. I don't know how much longer I'll hold this, but the best thing about Schwab is they actually have the least amount of damage from offering free trades because their revenue was only 8% from the trading that was being done on their platform. So I also have a Charles Schwab account, so I am a little biased there. I do like using their services. That is actually it for my portfolio. So I didn't really cover a lot about my moves. I'll go into it in the history right here. So you can see I did buy the HPQ, I had a limit buy, and then AOS I bought into, and then PSEC. So those are my 3 moves this week. And then you can see I have an AT&T dividend coming in November 1st, and that's what we're looking for in this portfolio, is those dividend returns. Very, very solid stuff. It's going to take a long time to grow this portfolio where we want it to be, but essentially we're going to get there at some point, and we just want to keep this portfolio growing as big as we possibly can. Moving forward, I'm going to be continuing to dollar cost average into a lot of these companies and may add a few here and there, but for the most part this is the structure that I like, and with a recession on the way, it'll be interesting to see how this bodes next to the market. See, basically what I want to do is beat the market, so when it's going down, I don't want my portfolio to go down quite as much as it does. So we'll see how that does. Anyways guys, thanks for checking out the video. If you have any questions, leave them in the comment section below. If you enjoyed the video, make sure you drop a like on this. It really does help with that YouTube algorithm. And thanks for stopping by.